Yeah.
Welcome to the podcast Money Metaphors with your host, Jason Coddington. Jason, good to be with you again. We're going to be talking about something today that I think a lot of people either don't want to talk about really badly or they're afraid to talk about it really badly. And I'm talking about Social Security. This could be an interesting episode.
Yeah, we'll dive into it. I think if you're going to plan for retirement, you should at least know some background or some considerations. So we'll talk about that today. I think in the last few weeks, a popular podcast or talk show host, Ben Shapiro, created a kind of a firestorm when he had said, people shouldn't retire. And and I think what he meant by that was complete, and he was making the case that, in his mind, retirement meant not working at all, period. And,
Yeah.
it went through the whole, mental health benefits of staying active and keeping your mind fresh and those kinds of things. And so,
Well, for the record, I'm with Ben on this one.
yeah, yeah. And I don't
I
think there's,
agree.
but yeah, there was just, there was a lot of outlash on that. And, I think he's got some good points. He makes some good points on, Social Security, and we'll talk about some of those
Yeah.
today. But it's percolated a little bit more in my office. People have had more questions about it, so we'll discuss that today. But I think the hope that we have today from listening to today's podcast is that some key things to be looking for and some key provisions, in there. So
Yeah.
when you're planning for it, you're not shocked or surprised, and
No,
I
and I know, but it's like I said, people either really want to talk about it or don't want to talk about it. And I think the source of that anxiety comes down to the question that gets raised probably a little more regularly now is Social Security going to even be there when I retire? So maybe we
yeah.
can start there.
Yeah, I mean, there's debate. I mean, it's one of those things where I think they have some different numbers, 2034, 2037. It's, the balance, they're going to start running into the balance.
Hmm.
They talk about funded or unfunded. There's some crazy bureaucratic terms on what technically unfunded is there. Simply put, right now I contribute, you and I both contribute to Social Security. Every worker out there that's, in the private sector is contributing to Social Security. If you're an educator or public service employee, work for the state or the government, likely you may or may not, just depends on your plan. But for the most part, those people that are working, they're paying into Social Security. That lump sum comes in, and then all those benefit payments go out. So that's how it works now. And based upon how there's just not enough people working to pay for the benefits. I mean,
Why
that's
am I
just
laughing at
basically
that?
what,
No, there are not enough people working. You're
I mean,
right.
so it's about, for the rough math, it's about 7.5% of your individual pay,
Right.
is what you do. And then your employer will pay the other 7.5% that goes into the system for future benefits. So, um, you know, that, that's what goes in. And, there's arguments. Do we raise that number? Do we postpone? They're going to have to come up with, do we postpone, the retirement age? They're going to have to come up with some policy decisions there. I don't know if you remember, it's been 20 years. President Bush, number two, the son, was president. And there was some talk about, privatizing Social Security at least.
Yeah.
And, we personally, I was an advocate or a fan of that. But that's neither here nor there. That policy's gone. It was interesting. My wife and I visited his presidential library in Dallas there at SMU, and
Hmm.
there's a whole wall dedicated to that whole privatization of Social Security. So it was interesting. So anyway, and if I would advocate for anybody that has never been to a presidential library, you should visit one. Just whether you agree or disagree with their policies, just a ton of education that can happen in there. So
Yeah, no, the presidential libraries in general are pretty interesting places. I was down in the Ronald Reagan Library, and I've been in the Richard Nixon Library.
oh yeah.
And the Nixon Library is interesting just because he was president at such a tumultuous time. But yeah, no, I agree. If you have not been to a presidential library, whether you agree or disagree with the president, they're really interesting places to visit.
Yeah. Yeah. So yeah, so Social Security. So I mean, I can't see, Congress is made up of elected officials. I can't think of a way in which there will not be Social Security. So in some way, shape, or form in the future. Again, but how are we going to fund it? That's the big question. And I think that's not just the question for Social Security. That's the question for everything in the
Yeah,
United States. Yeah. So, um, our future leaders have some work ahead of them, but we know what's law now. And so we're going to deal with that
got it.
today. So,
Oh, we can deal
so
with what we got. So let's
yeah,
do it.
yeah. So, and I think if you hypothesize enough, and what that causes is inaction, and then what happens there? So nothing. So,
Nothing. Yep.
um, so I think there are a couple things. So, a lot of it, was uh we've already touched on a little bit of it. Will it be there when I retire? Odds are probably. When you can take it, or how much is available, those I think things are going to be things that change. Um, will
Well,
it
it's
be enough?
interesting. It's interesting. I mean, a lot of people think, number one, how much, is it going to be enough for me in retirement? Some states tax Social Security, some states don't tax Social Security. The federal government does tax Social Security, and then of course there's the old, when do I take it? When should I be taking this benefit that I've been paying into for all these years of working?
Yeah, yeah. So yeah, so we're going to go through that today. I think just some background. Social Security was started in 1935, um, and you know, and what's crazy about that, when it was started, the life expectancy of a man was 61, age
Wow,
61, and a woman was 66.
that's amazing.
Fast forward to today in 2024, life expectancy of a man 76, a woman 81. So if husband and wife, right now we have to plan that, again, statistically, some people live longer. Um, if you're taking benefits at 62 or 66, anywhere, 15 to 20 years between a married couples, they'll be drawing on the system. And that's what's different compared to what was established in 1935, when there was people only living 6 years, or drawing,
Oh man, yeah.
so that's a big difference. It was never designed to be, fully. That's, kind of the next piece is, it's
Mhm.
it's a tool in your retirement arsenal, but it's not your
Yeah,
complete basket. And I think that's where, in my opinion, that education has failed. We need to have kids plan early for that, and know that Social Security is only really designed to be about a third, or to supplement your total needs. And so I'll just plant that seed now. If you're a younger person, happen listening, start early, save early. We've got some
it's
other
a
podcasts on
it's
that.
a part. It's a part. It
Yeah.
isn't the
Yeah.
entirety of your retirement. Yeah.
Yeah. So some stats, there's basically right now, if you're born after 1960, your full retirement age is 67.
Mhm.
So what in the world does that mean? So full retirement age is 67. That's when you would get your full entire retirement benefit. And quite frankly, the Social Security Administration has an amazing, we'll include the link in this website, or in this podcast at the bottom, the show
Yeah, be
notes.
in the show notes. Yep.
Yeah, but it has a great resources there. But there's you can do some benefit estimators, what you might have. I would encourage everybody to, log in there and get their benefit record, even if they're 15, 20 years away from Social Security. And what they'll do is on that, it'll give you an estimated benefit, but it also give you your past earnings. And you can go in there and look, and let's say you're
Mm.
looking and you come across like, okay, well, in 1997, I know for a fact you know, uh, I worked, but it's showing no earnings. This is where you can, establish, a case to, have your earnings looked at or corrected. And, it could help your benefit. So we always
Right.
advocate for people to go check that out and at least get their benefit estimated, and then they get their current record. So that's one thing.
Yeah, you
But
know
back,
what, Jason? I want to jump in here too and say, because I've done over the years done stories on identity theft and whatnot. And when someone's social security number is involved and it gets used, it gets sold off to somebody else and they use it, those earnings appear
hmm,
in your social security account. So if you're not checking your account, you should probably check your account, because you can also, in addition to saying, hey, I worked this year and it doesn't show it, you can also say, that's not I didn't, you can get ahead of things saying, that's not me. I didn't earn those are not my earnings.
yeah,
And
fair.
you can get in front of it early.
Yeah, very good. Okay. Yeah, it's a good point. I hadn't thought of that from that perspective. So, um, yeah, so so right now, if you go on there, so anybody born after age or 1960 right now, their full retirement age is age 67. So that being said, we'll use that as kind of the baseline. We'll start with 67. Your benefits will then, if you, and the earliest you can take it is age 62. So if you take less, and then the average is about 8% a year, a decline in benefits. So if you start at age 67 and you want to take it at 62, 8% times, roughly 5 years. And these are estimates, rough estimates.
Right.
Your Social Security is going to be, your full retirement is going to be reduced by 40%. So if you're
Wow.
$4,000 at full retirement benefit at 67, those benefits will be reduced by $1,600, you know, at age 62. So
So
those are
so if
things.
you can, you really want to wait till your full retirement age, right?
Yeah, yeah, and we're going to run through a couple scenarios where that might not be a bad idea to take it at 62, and a lot of it
Okay.
just depends on how much pressure you're going to put on your retirement asset, your portfolio, by retiring. So and we actually had a client to go through that. So we'll kind of go explain some of the things you have to consider
Great.
when doing that. Some key points though, I want to make about Social Security that you should be aware of. First of all, is know your full retirement age. Right now, anybody born again after 1960 or later is 67. But there's some other things. If you do take Social Security at age 62, if you take it prior to full retirement age, you can only make a certain amount of money before there is an offset. And then the Social Security Department will then reduce your benefits, okay, because you're already working, right? So that number is $22,230 per person. So let's say you retire at 62 and you say, I'm just going to do a part-time gig, and you make $40,000 in this part-time job. Let's say, I don't know, that's quite a bit for a part-time job, but let's say that's an
That's
example.
the case. Let's use that. Let's run with it.
Yeah, but it's 18,000 higher than the $22,000 allowed by Social Security. So Social Security can come back and say, okay, we're going to cut your benefits back because you made these dollars. So that's one thing to be aware of when you work, and when you start at 62, your earned income can't be more than $22,230 per person, for that. Otherwise, your benefits are going to be reduced. So that's important.
Ooh.
So that's a key pitfall. So when we're planning with clients, that's a number that we like to think about. So if you're going to retire at 62, you just can't, and you think you're going to work part-time, and if your part-time work is going to be more than 22,000, you really need to consider that. So that's number one. The other thing to consider is at age 67, there is no offset. So at full retirement age, you can have that part-time job, you can have other earned income, you can have your business, whatever that might be. There is no offset. There is no offset.
Okay.
So
So
like in our area,
you can in essence make as much money as you can earn and without penalty.
yes, they're not going to offset your benefits,
Right.
but prior to 67, in this case, or full retirement age, there'll be an offset for that.
All right.
So the other thing to consider is, so that's a key point here for small business owners. If you have business income every year, some people say, I'm going to take that Social Security at 62 and I'll use it to supplement. Well, if your business income is greater than $22,000, you need to just not do that and wait, or consider that, work with your tax person. But I would argue that you're better off waiting because of the
Yeah.
offset. So
Yeah.
in our area, a lot of farmers and ranchers, they're not taking early retirement because their business income, um, precludes it. So,
Right.
so that being said, the other thing is how, Social Security, taxed or not taxed, you brought that up earlier. And there's this crazy thing called provisional income. So what in the world's that? So let's say you take Social Security, whenever that is, early or at age 67. If you have more than $25,000, if you're single, $32,000, if you're married, an income of any kind, rental income, distributions from your IRA, if you're over 74, any income, pretty much any income at all. There's some that are exempt, but municipal bonds, actually, crazy enough, which are income tax free from federal tax, that counts as provisional income for Social Security. What that does is then now subjects your Social Security to taxation. And, we get this, quite a bit in our office where there's complaints about, man, my Social Security is taxed. It was a tax to put it in. Now I'm getting taxed. And I completely understand the frustration. Um, but if we've done our planning right and you have other assets, it's highly likely that any Social Security benefit you have is going to be taxable because you're going to have the dividend income. You're going to have
Yeah.
an IRA where you're going to have to distribute assets. I mean, we want to minimize that, but it's just, that's one of those parts in planning that Social Security benefits could be full or partially taxable depending on how much provisional income you have. So that's the
And just
other.
to be clear, Jason, we're talking about being taxed at the federal level right now, right?
Correct.
Yeah.
Yeah. I'm just leaving it generic for federal.
Yeah.
So yeah. And then the other key provision, this is one we see a lot, because, again, we're, agricultural area. And, sometimes there's spouses that work outside the home and sometimes there are not. And in the case where, let's say a husband and wife, the wife was, again, very, very noble profession of, not earning an income, but definitely working, raising the children, and maybe didn't have as much earned income. Well, in that particular case, one thing to consider when you apply for Social Security benefits is, as a spouse, you're going to get your own record or half of your spouse's, whichever's greater. So,
Hmm.
if let's say, for instance, your own record, you qualify at full retirement for $1,000 a month, but let's say, we'll use a husband in this particular case. Let's say his benefit is $3,500 a month. Well, half of 3,500 is 1,750. The spouse would get the 1,750, which is greater than the 1,000. So in this particular case, so that's important when you plan. So spousal benefits are important and how we look at that. So major things there. Again, there's an offset. So if you work prior to 62, be aware of that. 22,230. Don't make more than that. There's provisional income, which is going to likely make your Social Security taxable. And there's just kind of whenever you take it, 62 or later. And then the spousal income provision. So something to be aware of when you do your calculations. Not only your record but your spouse's. So that's the overall kind of guts, if you will, of Social Security. And again,
Yeah.
the Social Security Administration has some great resources here. We're going to run next through a couple of case studies, and from there we'll go through it. One's pretty simple. We'll start with Hank and Holly, and we'll just kind of give you an example of some of the things they should consider when they go through it. So we'll use them first. So they've done a great job. These Hank and Holly worked hard their entire life. One was a plumber, and Holly in this case also worked, but it was kind of part-time as she was raising the kids. And so when we looked at it, it ends up that his benefit is $3,800 a month. And Holly's is, because half of his record is 19, half of his record of 3,800 earnings record, she gets half of that, so 1,900. So between the both of them, they're going to get $5,700 a month at full retirement. So not bad. I mean, not bad.
No.
So, and they have funds. So obviously did well, and as a plumber, paid into the Social Security system, and now is ready to turn on the faucet, if you will, for this income. So that being said, so the question is, they've had to us, well, why shouldn't we just wait? Why take it at 67? Why don't we wait till 70? And so that becomes, now we're starting to, talk about the certainty of uncertainty, right? We don't know how long people are going to live.
Yep.
We don't know all of that. So we have to plan. And so a lot of this comes into the fact, and we'll just walk through some of the considerations that Hank and Holly should be thinking about in doing this. Is, they can still work if they want, as a plumber, this individual, Hank, he can go back, and do some part-time work for some other plumbers, some odds and ends and things, and have a flexible schedule.
Yep.
And so, because he's full retirement, he doesn't have to worry about that $22,000 offset. So
Yeah.
he'll do that. And as we go through this, they're really like, I have the part-time income, the Social Security is enough. Holly, volunteers, at a local Goodwill. So it's just really, they're like, why don't we just wait? We have retirement funds we can take from.
Sure.
So it's common. So there's a way, we have a calculator and an estimator and we can go through it. The big question is, when you look at 67 versus 70, is really what's the longevity? Yeah, I asked the question is, what's the longevity history with your family? Do they live long typically? Do they not? And the reason that's important is because if, historically speaking, if your grandparents and parents have lived long, you could make the argument for postponing Social Security. But if they haven't, then you got to really think about that. And here's what, in their case, let's look at this, right? So if they take it if they take it both at 67, right? As opposed to waiting, and we're just gonna use Hank here. And we're gonna round his up to 4,000 just because the math is simple.
Yeah.
So $4,000 a month times 12 is $48,000 a year. That's what he's getting in Social Security benefits. So if for every year he waits, so 48,000, he waits again another 48,000, and then he waits till age 70. That's a total of $150,000 of money he's waiting for if he rotates to 70. So now 70 turns on. He's going to get, now you remember earlier in the conversation, he's going to get about, because he waited to age 70, he's going to get about 20% more than the roughly $4,000 a month. So he's going to get more money. But the question we have to ask is, how long is it going to take Hank to make up that $120,000 he forewent from 67 to 70? And then
Gotcha.
that kicks it out there. And so that's the question we have to have. And if it's, if we look at that in his particular case, if it kicks it out to, he's got, it's going to be 83. Okay, how do you feel about that? You think you're going to live to 83?
Well, hope so.
Yeah.
Hank seems
So
like a nice guy.
yeah. So, that's kind of, and then, so that's how we would look at that. And then, and what I would advocate, and what we have done in the past is say, what, if you feel comfortable, don't make the decision yet. Try 1 year at 67, and we can revisit this conversation next year.
Yeah.
And you'll have more benefits. So you're not forced into painted in a corner. And so that would be full retirement. So just real quick, that's what you really want to consider. If you push it back, yeah, you're going to get more, but you've got to replace what you gave up. And so you got to live longer, be healthier. And, and if you're like me and, like a lot of that processed cheese on those nachos, you got to maybe not take it at 70 and take it at 67. So anyway, so now we'll go, so different case study. Now this is where we're looking at age 62, and
Okay.
62 is really early to retire. And that's going to sound, when I say that, you can retire at 62 or partially retire at 62. The question is, do I turn on or turn off Social Security? And we'll go to John and Julie in this particular case. And we're just going to use the same benefits. John's benefits, full benefits, and this is where it gets crazy. John's full benefits are $3,800. And Julie's would be, $1,900 at full retirement. But remember, I have to subtract that 40%, right? So again,
Yeah.
if I'm just doing it real quick, he's going to have about $1,600 less. So it's not $3,800. Okay. It's more like $2,200. And then Julie's would be half of that, $1,100. So see the significant difference there in benefits.
Yeah.
But what's their concern is not so much that they've said, Jason, look, we want to slow down. We've worked hard. 62 is the deal. I'm like, okay, fair enough. I go, well, now, are you going to have to, if you could you wait to age 67? And they said, well, we could probably figure it out. We'd really rather not. I said, okay, if you wait till age 67 to retire from Social Security, will you have to draw from your portfolio? Yes or no to supplement? They go, well, absolutely. So we would have to draw to supplement so then we start looking at the portfolio. And then we step back and say, okay, well, they're going to have to draw out, you know, quite a bit from their investment portfolio. In this particular
Yeah.
case, $36,000 to $40,000 a year. You know, again, even with the reduced benefits. So now we have to look at what's the impact of $40,000 out of that investment portfolio over the next 5 years. You know, in this particular case, not counting the earnings, $200,000. So now their investment portfolio is going to take a $200,000 hit early. And what we really need that money for is down the road. So if we pick a date like, you know, age 72, you know, and the reason we would pick that is just hypothetically say, okay, we have to have some numbers to compare against. So they're
Yeah.
62. They take it early. They could take it at 67. And then, you know, we use 72 because it's 10 years later than 62. So in this 10 years, what does their portfolio look like given some assumptions? They take a pretty big hit, you know, as opposed to
Yeah,
taking
I
it
would think
early and
so.
letting that $200,000 grow for the next 10 years. In this particular case, it's kind of a unique scenario, but we found that, you know, we don't always suggest you take it at 62, but given their scenario and the, you know, assumptions we used, and we weren't using, you know, crazy rates of return, you know, we're using 7%
Okay.
model portfolio returns. Um, it was better for them to take Social Security at 62, you know,
Wow.
because the hit on the portfolio, if you're going to have a rule, you know, if you're going to tag your portfolio to supplement by wait for Social Security, you could make the argument for not doing that. And that's kind of where, and again, it takes some math, but, you know, that's, you know, and I guess the point of both of these case scenarios, everybody's different. And the best part is to get, you know, have an idea of what you have, what your goal is, what your goal for retirement is. Are
Mhm.
you going to work? Are you not going to work? And then let's run some scenarios so you can make an informed decision.
Wow. Well, these sound like numbers you really should have a financial advisor go over with you. You know, in some ways it's simple, but it's actually not because I think a lot of people get intimidated, Jason, when they start thinking about retirement and looking at what do we have to plan for and how does Social Security fit into all of this.
Yeah. Yeah. And it's a lot to consume. And, you know, we've offered, I don't know, we have the estimators and the calculators as well. Social Security Administration does. I think what another voice can do for you is ask, you know, help you with, you know, what you don't know. You know,
Right.
The Donald Rumsfeld, right? We don't know what we don't know. And so, you know, some people say, I'm just going to take it at 62, and then they have plenty of money. It wouldn't need to drop from the portfolio. You can find out that that would have been a better decision at 67 or even maybe 65, even if it's partially early. You just kind of, you got to run through those scenarios and just understand. And I think, you know, once you are clear about that, you can have the, you know, have the understanding. One thing we've
Mm.
offered in the past is, you know, within 20 miles of us in about each direction, there's a social security office. And you can make an appointment. Of course, it takes a while. We would not suggest going and waiting. Um, but I've gone with my clients to the Security
Yeah.
Administration and met with them right there with a, you know, a representative to go through the scenarios. Are very helpful. You know, the one that there's one in a small town in Hanford that's right next to an ice cream place. So we like that one because you can always
I like that one too.
yeah. So anyway, but that the there's you know, some thoughts there that, you know, just seek out your advisor and ask them to go with you, you know, or at least, you know,
Yeah.
I mean, I don't, I wouldn't, we've done that for our clients. And I think that's, it's worthwhile. It's a huge decision. And it's a third of your, you know, it's a third of your resources and an income, for retirement. So, um, but if nothing else, you know, any takeaways from this, if you haven't done it already, get your benefit record, go online, do that, and get your estimator so you can at least see, even if you're 40, just see what it looks like for you right now.
Yeah.
And if you're getting close to retirement, we would say, you know, or partially retiring, take that 62 and 67 decision, uh, you know, and anywhere in between, take it serious and
Mm.
not just, you know, think about the implications in the long run and consider your history, your longevity, and your family, you know.
Yeah.
Um, so
Yeah.
that's a, and we'll have some
My side of the
resources.
family
Yeah.
is okay. My wife's side of the family is a long time.
Yeah. Yeah. So see, you could say, hey, we're gonna take a gamble and we're gonna go with 70, you
Yeah.
know. And we're gonna get the extra payment, and if we live long, we won the bet. But I think at a certain point, I think if the other side of it is, hey, what are your goals? You want to travel? Yeah, we'd like to travel. It's like, okay, well, you could wait 5 more years until you're older and maybe not as mobile. And again, I'm not saying everybody's not going to be mobile, but I mean, we get older, right? It's a fact of life. And so,
Yeah.
well, if you had another $30,000 a year to travel, would that be important? Well, yeah, then what does that look like? So it's not just numbers, it's lifestyle, it's legacy, it's
Yeah.
that kind of thing. So
No, no, no. And again, as we're wrapping this up, I want to underscore the fact that it's like it's advisable to have another voice in the mix, an authoritative voice in the mix of your financial advisor, somebody who can sit down with you and help you look at those numbers in an objective fashion and say, these are the scenarios. What do you think and what do you want to do?
yeah, yeah, I think yes, just it's not going to hurt to have that that background.
No, and I will say this, it potentially could hurt if you didn't.
Yeah,
As a matter of
yeah,
fact.
it's hard to undo, right? I mean,
Yeah.
you take it at 62 and you thought, well, I'm working now, and it's hard to, it's not easy to undo. So
Not
that's
easy to undo. That's a whole nother complicated scenario.
yeah,
For
yeah,
people who are listening, Jason, who want to reach out to you, maybe have a conversation with you, what is the best way for them to do that?
yeah. So our website, www.coddingtonwealthadvisors.com. There's some resources there, but the top right-hand corner, there's a button there to click to schedule a meeting. Get a brief 15-minute phone call. We can discuss this scenario just like we did, and that's probably the easiest way, and no cost to do that. And then the other way is, of course, you can call our office directly. 559-897-0040, and you can schedule that way. And in addition, the show notes here will have some resources for you from items to consider with regards to Social Security. So
Yeah. And also down in the show notes, folks, if you didn't catch any of Jason's contact information, it's there as well. So, don't worry. It is accessible if you missed it when we went past it. The other thing I would encourage you to do, of course, is hit follow, subscribe to this podcast. That way, when Jason puts out a new episode, you'll be notified. Don't have to worry about when or where you heard it or how often Jason puts these things out. And if you like it, I would also suggest that you rate it and tell other people about it and let people know what Jason's doing and what you think about his podcast. Until next time, on behalf of Jason and everybody at Coddington Wealth, I'm Bill Tucker, reminding you that you can go out today and make it a great day or not. It's your choice. Thanks so much for listening. Until next time.